Welcome to the Opening Range Breakout platform. In this onboarding series, I'll show you how to use the ORB Setups platform to find some of the very best trading setups every single day. Now, before we dive into all of the different features of the platform, which are going to be videos 2 through 6, I want to spend video 1, which is this video, talking about the basics, talking about what the setup is, the key terms, and helping you build a good foundation to set you up for success. Now, this all starts with understanding what is the problem we're even trying to solve. Why does this platform exist? If you've been trading for any length of time, you know the challenge. There's thousands of stocks usually, and you have to comb through these through a platform like Thinkorswim or TradingView in the Scan tab, which is not easy to use. There's dozens of strategies to choose from, the scanner's clunky, and when you add in all of the parameters, it seems like there's endless possibilities, which really just leads to most traders feeling overwhelmed. That tends to lead them to jump from stock to stock, strategy to strategy, hoping something works. Now, this is where our ORB Setups platform, more importantly, the stats inside of the ORB Setups platform, is meant to help solve this. It systematically helps you find some of the best opportunities every single day, and here's what makes it somewhat different. It uses the opening range breakout setup, but it uses that to find different permutations, both the breakout along with the pullback, to find setups throughout the day. You'll find that this one setup, even though most traders traditionally use it to trade just the first, say, 30 minutes of the morning, actually gives you plenty of opportunities, plenty of high probability, really lucrative setups throughout the entire trading day. Let me quickly explain the opening range breakout setup for those who are new to the concept. Every single morning, the market opens at 9:30 a.m. Eastern, and this starts with the battle between the buyers and the sellers. You have all of the overnight news, you have all of the pre-market positioning, every institutional order, everything that collides at this opening range when that opening bell rings. And you'll see that that's the period of the greatest volatility usually in the markets. Now, once you take the price that's established in the first 5, 15, and the 30-minute ranges, you have what we call the 5, 15, and the 30-minute ORB. The 5-minute ORB takes place from 9:30 a.m. Eastern to 9:35 a.m. Eastern. The 15-minute is the first 15 minutes of the market, so from 9:30 to now 9:45, and the 30-minute is from 9:30 to 10 a.m. Eastern. We take the opening range high and the opening range low in between these time periods, and that's what forms the opening range. So if we take a look at this example here, this is an example of the S&P 500. Inside of that, we take the high that was formed in this first 30-minute period. This 30-minute period is 6:30 a.m. to 7 a.m. This is Pacific Standard Time, and that's the first 30 minutes after the markets opened. Now, in this period, this was the high that was formed, 617.64. If you think about what this level represents, this was the highest level that buyers were able to take price up to before sellers defended price. They drew the line, if you will, at 617.64. Now we do the same thing on the opposite side. So what is the opening range low? In this case, 616.61. Now the difference between the high and the low is what gives us our opening range breakout range. We call this the range value. In this case, the difference was $1.03, and that is the range of this particular 30-minute breakout or 30-minute opening range. Now, the key takeaway in this is this battle that we talked about, the battle between buyers and sellers. This top place represents the place where we can say sellers won. It's where they were able to defend and buyers could not break a penny above 617.64. On the flip side, this is the opening range low, 616.61, in which the buyers won. Sellers were not able to break a penny below this level. So now we take a look at these levels projected going out after this 30-minute range is over. So from 7 a.m. onwards in this case off of the Pacific Standard Chart, and we look for a breakout. Do we see a breakout above or below? Whichever direction we see that breakout, that represents the initial directional conviction. The direction in which, say, we break above, now buyers were able to win, suppress the sellers who previously held 617.64. Now buyers were able to push past that, and we call that the breakout. Now part 2 of our terms represents the actual range value. So we talked about the $1.03. Now let's look at this as a full setup. Here's how that setup turned out. If we look at what the half range, the full range, and the pullback levels are, let's start with the half range. That's the first key term you should be familiar with. The half range represents exactly how it sounds, half of that opening range. So initially, if you remember, we looked at this opening range as $1.03. If we were to split that in half, that's what we call the half range. Now we use this half range to place both stops and targets inside of the platform. So you'll see there would be something called a half range stop, and that's a stop below this half range mark. Same idea, half range target is using that value, the same value, and projecting it to the upside. So in this case, that would be $1.03 divided by 2, which would be about 52 cents. And that's what you would see inside of the scanner is both the half range target and the half range stop. It would be 52 cents plus whatever this opening range high is. And that's how we project this target level. Same thing for the full range, except now we're using the full $1.03 and we're projecting that on the flip side. And in this particular setup, you can see how we broke out and we made a move all the way to the full range target. Finally, you have the pullback level. The pullback level is the same as this half range mark, except it's the actual level. It's the name for the half range area exactly divided by 2. So whatever this opening range high is, subtract the 52 cents for the half range, and that would give us the pullback level. Now you'll see the pullback level plays a key part because we look for setups often that are what we call pullback setups. That's a full strategy built inside of the platform. That would have been if, say in this case, price had pulled back. That's what the pullback setup would have found. The initial breakout took place, and in this case, price pulled back, and then we're looking for an entry back towards the long mark. This opening range acts as a decision point for the rest of the day. It's based on the day, so it becomes relative for every single trading day. And when you take the first 5 minutes, you take the first 15 minutes, and you take the first 30 minutes, that gives you 3 different time periods to study market behavior to see who's controlling more, bulls, bears, and what direction is the market trending. So to recap, this morning period, 9:30 a.m., is a very important time period, and the first 5, 15, and 30 minutes really gives us a lot of clues in what we can expect for the rest of the day. It also gives us a high and a low that we can make relative to that particular day's volatility. There's so many forces that are converging here. You have all the institutional orders, you have even retail traders who had overnight news that are now reacting, you have market makers, you have all of the algo bots that start with the market open. There's so many forces that this is a very powerful time period, and understanding the psychology of these breakouts really can help you transform your trading. So one more time to recap, the range high is where sellers stepped in with conviction. Range low, where buyers defended with strength. When price breaks above the range high, for example, so a bullish breakout, which is what we saw an example of, that's where buyers have overcome that initial resistance. New buyers are now willing to pay higher prices. That's what we're seeing. We're now seeing at least one buyer willing to pay a penny more. Short sellers, anyone who did go short at that opening range high, now needs to start to cover positions. And if you see momentum starting to accelerate, some of these moves, like the one we just saw in the S&P, can really start to accelerate. That's where having a tool like the live scanner, I think, is really powerful. This starts working for you. Think of it as your personal trading assistant that you can use to find setups throughout the day. In video number 2 of our onboarding guide, we're going to dig deep into the live scanner. I'll show you how to use the different trade filters. I'll show you how to use and make sense of this table, how to actually go from table to a backtest, and take this live scanner and turn it into something that works for you. All right, I'll see you in our next video in which we dive deep into the live scanner. If you'd like to get a head start, jump into the scanner yourself and start exploring it, click some symbols to get a feel for it before we start digging deep in video number 2. See you there.